What's up, folks? I'll be trading some back to back with another stream today. I hope you all are well. Let me just double check if the audio is working and stuff. Okay. Okay, boys, and maybe also girls. I would say let's dive right into the charts. Um, yes, sir. Okay, let's start off at the weekly charts. Just a brief high time frame bias. Oh, okay. Wait, let me just. No. Mm-hmm. Okay. Okay. So on a weekly time frame, as you can see, we swept sell side liquidity, weren't able to close below the sell side. We just wicked through it. This rejection block, rejected price then resumed higher, and now we are going to balance this price action. This is a weekly volume imbalance, okay? We only had sell side delivery, okay? Now this volume imbalance is still inefficient in a buy side delivery, which is the reason why the bias for the week is bullish, and I anticipate a bullish up close candle laying above or closing above this weekly volume imbalance. Okay, so bias on a weekly still bullish, daily looks kind of similar. Sell side liquidity taken, weekly volume imbalance, trading to it, as I also outlined in the beginning of the week in yesterday's live stream. And yeah, all my bias was delivered just like I outlined beforehand, and now we are probably looking for this weekly volume imbalance consequent encroachment point. This is my first target, or maybe the first target is yesterday's high, then these quadrant levels of this weekly volume imbalance, and eventually maybe we get to these relatively equal highs above here. We also have another daily volume imbalance right here, so that might be the draw if we can make it through this volume imbalance and get a close above this high. Okay, then I think these relatively equal highs and this daily volume imbalance, this daily fair value gap is likely to be delivered too. Okay, that's about it regarding the high time frames. Now just skipping through the 1 hour. So on the 1 hour, sell side liquidity swept. Here we retrace down into this daily fair value gap. Okay, this is also something I forgot to mention. It's another reason why we are in fact bullish. Trade down into it, failed to trade down into the consequent encroachment, which is absolutely a bullish price signature, which I also mentioned yesterday or was anticipating, and it came to fruition perfectly. Okay, so now we are trading yesterday's wicks, discount wicks range. Also weren't able to trade down into the midpoint of it, so also extremely bullish. So we are just expecting higher prices, as I told you guys. I think this, okay, let's just do like this. Or maybe, yeah, we can keep it like this, no problem. I do this daily, weekly volume imbalance orange. Okay, personally, I always weekly PD arrays. Weekly PD arrays are always shaded in orange. Daily PD arrays are shaded in green. It just, I don't know. I started doing this and I stuck to it, so yes sir. So let's drop down into the 1 hour. Like I said, sell side liquidity swept, traded down into daily fair value gap, market structure shift, a little retracement down into this volume imbalance and this volume imbalance. As you can see here, traded down into it, and now price resumed higher during today's London session. So I think it's a London low of the day and New York continuation profile. So yeah, that's what I'm anticipating for today. Okay, that's enough. Okay. So now let's put the gradient at the kill zone indicator on. London low. So what I would like to see is a manipulation down to 3 pre-market lows, come down into this fair value gap, and maybe we also have yesterday 4:14 p.m. close was right, yeah, here, somewhere around here, and 9:30 probably in 5 minutes going to open up above here. So we have a huge premium gap actually. So maybe we could see a retracement down into opening range gap, consequent encroachment, midpoint by 10 a.m., which would perfectly align with our bias manipulation down lower, opening range gap, midpoint. Yeah, I show you that one in a second, which would be like around here, manipulation, retracement down into order block, and then continuation higher. So yeah, let's drop down into the 1 minute. I think we can delete this one right here and mark out okay, let's leave this one, too much on the charts. Let's keep it simple and clean. So pre-market sell side liquidity is here. Okay, let's put it in white, and this is the sell sides. Okay, pre-market high probably here. I think that will stay intact for the next 3 minutes. Buy side, zack. Okay, These are the electronic trading hours liquidity pools. Now, this is RTH, regular trading hour. Okay, so this is the close of the 4:14 p.m. and yeah, we will open right around here maybe. We have relatively equal lows on the downside, but since our high time frame bias is bullish, I wouldn't expect price to come all the way down into here and take out these relatively equal lows. That wouldn't be bullish at all. So as I told you, I would want to expect something like this. No electronic trading hours again. I would expect something like manipulation lower into midpoint of opening range gap and then continuation higher. We could also see this manipulation lower higher, or we could see a manipulation higher to trap retail trade along, then manipulate lower to stop them out, and then to reveal the real move, which is higher, obviously because our bias is bullish. So yeah, we will see. It's 9:29. Okay, I think we will open. We wait for the open. It's kind of cold outside, bro. And here. Okay, let's see. 10 seconds until opening bell. Oh, that's better. Okay. So now we okay. We open here. Okay. Buy side liquidity. Swept. RTH. Relatively equal highs. Yeah, so I guess manipulation, take out sell side liquidity. It would be even more bullish if we fail to trade down into opening range gap, consequent encroachment point. But yeah, maybe. Let's just put that away for a second. Oh, maybe, wait. Okay, opening range gap is around this low. I want to keep the charts clean. So, yes. Let's see. Let's see. No first percent fair value gap yet. Obviously, it's 9:32 now. Okay, as I told you guys, two scenarios I want to, oh, there are two options that I would. There are two options for price. So a price either manipulates higher, traps retail trade along, stops them out, and then reveal its real move, or we manipulate the downside and then continuing higher. This is what I would like to see. So we'll see. Took out minor buyer side here. So maybe we could actually see this move come to fruition. Trap retail trade along, stop them out, and then go higher into our first objective. New week, weekly volume imbalance, consequent encroachment points, approximately right around here. So yeah, we'll see. Nothing tradable yet. Cold, stay cold. We got two viewers actually. What's up, guys? If you have a question, just let me know. I will answer it. Okay, buy side liquidity now swept close above. That would be the sign for retail to go long. Just for my safety, guys, this is only my opinion, okay? This is not financial trade advice. So keep that in mind. I'm not telling you to trade, to buy or sell. I'm just sharing my opinion, guys. That's it. Okay. Okay, we just take off. Apparently. That's also an option, but nothing I would be wanting to trade. I don't want to chase price, so if it just keeps going from here now without me. Oh boy, oh boy, oh boy. Okay, weekly volume imbalance, lower quadrant traded to, consequent encroachment above here, right around here. Damn. This volatility is crazy. Hmm. Sorry. Damn. Okay, boys. I guess price just took off. I think it's not coming back. It's too far away. So no news for today, 10 a.m. No high impact news photos. for today. Tomorrow at 8 p.m., 8:15 or something, we have non-farm employment change, which could, oh boy, bro, what the fuck? Come on. I hate, yeah, okay. Target for the day already delivered. Okay, no, we actually, okay, let me show you guys. Okay, that can happen. Unfortunate. It would have been action. We had pretty nice market structure, but yeah. Okay, like I told you, bias for the day or target, weekly volume imbalance, quadrant levels. We failed to trade to the consequent encroachment point, but I think we do now. Boy, oh boy, oh boy. Come on. Come on, bro. I wonder if if ICT was able to be to be part of it. Yeah, we swept Southside, minus Southside. Is enough. Bro, but there's nothing to no retracement, bro, nothing. Yeah, this is obviously one entire auto block. Could have, yeah, okay, possible, but it wouldn't be my model. So auto block high. I would expect this down close candle not to be traded to. So stop loss would be just above this opening, just below this opening. This is actually a high probability auto block because it forms right at the weekly volume imbalance low. So you actually could have taken this one and then target lower quadrant, or even, or even, yeah, bro, that, yeah. Okay, if I got in here, I would have never hold on to until the midpoint. But actually, it's just okay. 1, 2, 3, 4, 5, 6, 7, 8 minutes. In 8 minutes, we traveled 100 points, bro. That's insane. That's fucking insane. Yeah, okay. Obviously, this can always happen with the volatility we see nowadays, but this is the least likely option, I would say. But yeah, it came to fruition. It's okay. Yeah, maybe my analysis was off. Obviously, we don't need to take the pre-market low. This is also sell-side liquidity, which in fact is enough, as you can see. But I would have wanted then the opening price be around here, and then have like power of 3, a manipulation lower, but we opened here. Oh no, oh okay, we opened here. 9:30 opening, low manipulation. Okay, this is power of 3. Yeah, okay. Bro, I didn't expect it. This kind of volatility injection, bro. Damn. Damn. It's always funny, you know. You look at the market like this. Normal candlestick range, 1 minute candlesticks, maybe 10 handles. Bro. Suddenly you have this huge move to the upside. Okay, bias for today was correct. Anticipated it actually perfectly, panned out. But we didn't go for the sell side. For the sell side, we left the sell side intact. Or manipulated this low. So yeah, okay. Huh. Bro. Okay, so I would say, yeah, let's just tape read this one. In order for price to show further willingness to go higher, this fair value gap should act as a breakaway fair value gap. Okay, this should stay open. Maybe we can, oops. Bro. You would want this fair value gap only be traded into the upper half, so lower half should stay open. Trade down into upper quadrant. Maybe is there a volume imbalance? Okay, you have to anchor it and include this volume imbalance. Okay. Yeah, let's just delete this. This too, it's too much on the chart. So what could be our next upside objective? Weekly volume imbalance midpoint delivered. Let's see if price is willing to trade up into the upper quadrant right here, or high comes in at 25,699.50 is the high of the weekly volume imbalance. Maybe we can just use the midpoint. Yeah, let's put in orange. Okay. Let me show you guys this for a second. On this workspace, I only monitor the opening range gaps. As you can see, today's opening range gaps, yesterday's, the day before yesterday, and so on and so forth. And this one is the opening range gap from the November 13th, and we traded up into the upper quadrant here. Now it's moving sideways. Huh. Guys, no clue what price wanting to do now. I guess we'll have a little retracement and probably continuation higher. We would want to, yeah, we want prices we want price to close above this weekly volume imbalance consequent encroachment level. Oh, okay. Guys, look at this. Okay, this is a new week opening gap, a new day opening gap. Indicator, I could absolutely recommend you using this one. It's perfect. You don't have to do it manually. So if you look at the 5-minute chart, price beautifully used this level. But still, bro, nothing for me to trade, unfortunately. Oh, not unfortunately. This is, in trading, guys, you shouldn't have the feeling of missing out something or saying to yourself, oh, if I should have entered there, or why didn't I enter there? Oh my god, this and that. Just don't care about it, okay? If you take a trade and you follow your rules, perfect. If it pans out, even better. If not, you followed your model. If you don't take a trade, probably your model everything of all of your criteria wasn't checked, therefore you didn't enter. So there's nothing to do anything about it. It's just the way it is. Don't feel like, oh, I missed that move, bro. Every day there are several moves you could be entering on, okay? If you missed this one, okay, maybe you have a PM session later on where you could take a profitable trade. So that's the mindset you should have in trading. So I'm not mad that I wasn't part of this move. It's just not my model, so I don't care what happened here. I don't care. What I'm wondering if now I'm trying to figure out what the first presented fair value gap is, because this is first presented order block. This candle, price didn't trade down into it. Price just trade down into these 1, 2, 3, 4, 5, 6 consecutive down close candle order block. This is an entire order block. Price traded down into this one, but failed to trade down into the most sensitive lows down close candle, which is actually even more bullish. You have to just treat it like fair value gaps. If price trades down into a busy fair value gap and only trades up down into the upper half, this is bullish. And as you can see, if you grade this order block, price wasn't even able to trade down into the upper quadrant, which is bullish. So first present fair value gap. As I told you, I would want this price at this fair value gap to be unfilled. This is kind of like a breakaway gap. So I wouldn't at least label a breakaway gap the first presented fair value gap. And as you can see, and as I predicted or called beforehand, this is most likely the fair value gap that the algorithm will use so yeah, wait a second, guys. Okay, my mom just called. Okay, only trade down into the upper half, wick down into the lower half, body stayed above. This is always what we want to see in a bullish scenario. So yeah, kind of consolidating right now. We are in the macro time window right now, so maybe we should see or should expect some type of movement. Or not should, we can. If price wants to move, then it wants to move within the macro time window. Price actually only does two things according to ICT in the macro. So it either moves sharply in one directional or it kind of consolidates and does nothing at all. So if we look at this again, price, let me show you. 13th, November 13th, opening range gap, this one. Trade up into the upper quadrant, trade down into a midpoint, and now upper quadrant again, okay? So this is my workspace for all of the opening range gaps. Usually I only monitor the last 5. Yes. Okay. Yeah, if you are wondering, these are just my workspaces for, this is just like intraday or intra-session annotations. First presented fair value gaps, opening range gaps, yeah, opening New York opening range specifically, London opening range, midnight opening range, and new week and new day opening gaps. So yeah, let's just take opening range gap low, opening range low, opening range high. Now it's 10 a.m. So opening range high comes in here, maybe. Can it closes in 10 seconds? Yeah, okay. Opening range high right here. First presented fair value gap. I don't know, this one or this one. I would prefer this one. As I told you beforehand, this is the one who's most likely going to be used, and we did. So let's just delete this one. And new weekly volume imbalance upper quadrant, and high. So terminus ultimate target is new weekly volume imbalance high. This is upper quadrant. Yeah. What is S&P and Dow doing? Oh, okay, Nasdaq compared to S&P and Dow, only Nasdaq rallied higher. S&P kind of stayed in the range, and Dow manipulated to the downside the pre-market lows that we were wanting to be taken out. Bro, the thing is, I don't like when market is like kind of in discovery now. Okay, so for me personally, price is in discovery right now. Okay, let's just turn this indicator off. So for me personally, price is in discovery now. Why is price in discovery? Because there's no liquidity to the left. Okay, and we are just discovering if we are able and strong enough to trade into weekly volume imbalance, upper quadrant and high. Bias for today for me personally was that we trade into weekly volume imbalance, consequent encroachment, as I outlined in the beginning of the stream. Now we already delivered my bias and we are in a huge premium. So I don't like to trade in these conditions. Also, Dow is moving to the downside. I was going to the downside, now it's moving higher again. Yeah. Let me show you guys actually what I'm referring to. So this is the weekly volume imbalance that I'm talking about. Midpoint of this weekly volume imbalance, midpoint upper quadrant high, midpoint delivered. Now we are looking for upper quadrant and high. Also, maybe in the next few days, if we are actually able to close above this weekly volume imbalance, we might see another run maybe higher into these relatively equal highs and this daily volume imbalance, daily fair value gap. But this is just some ideas. If we are able to close above this and yeah. Yeah, as you can see, nothing is here absolutely in discovery. Are we now able to, of course, you can take a trade here, but for me personally, it's not my model. It's too far in a premium, first of all. Second of all, I wouldn't want to risk a trade here. So if you would put a gun to my head, I would take this trade, enter right at this fair value gap. Low, high, lower, low, high, that's a breaker. So stop loss below, fair value gap candle 1, 2, 3, below first candle low, and which is also below this breaker here. So this is maybe something that could pan out. In fact, okay, let's review it. Okay, we took sell side liquidity, but price was so strong it could not even go down there, which is bullish. As I outlined beforehand, this is going to stay open, which is also bullish. That's a breakaway gap. Now, we also weren't able to trade down into lower half, but price stayed in the upper half, which is also extremely bullish. So this is not this. I don't know if this is low probability. I think that would be a better trade if that would be your model. I mean, I guess you could take this trade, but yeah, as I told you, nothing I would take personally. Okay, that's too much again on the charts. I delete this one and just weekly volume and balance consequent quotient. Perfect. volume imbalance fetch. Okay. Ah, consequent quotient point. Okay, price really strong. Wasn't even able to get down into this volume imbalance. Volume imbalance. Fair value gap. Okay, crazy strength right now. Bro, this is huge. Now we want to see price close above the upper quadrant. Damn. First percent fair value gap. Wasn't able to close above the upper quadrant, so maybe we might see a retracement now. Let's see. Okay. Do I take this trade or not? Yes or no? Yes or no? Okay. Bro, it's too far in a premium. Boy, oh boy, oh boy. Oh boy. It's just too far in a premium. Do we risk it or don't we? Yeah. Um. Bro, it's too far in a premium. It could retrace deeper and the thing is, when I trade, I only trade with a stop loss of 25 pips at points at most. So this would already be too big. So I would either need to enter here 25 and stop loss shouldn't be in jeopardy normally, or if we weren't that far in a premium, that would definitely something I would be taking a trade on, okay? But since we are in a premium, price could retrace on us and even retrace down into this one, take this low short-term low out and go higher. Or of course it could also pan out. But maybe if price just gives me now a sign to enter on, maybe I enter on an auto block. Bro, this is extremely bullish. Price bodies didn't even close inside of this fair value gap. Bro, Bro, it's just too fucking high in a premium. Okay, so for those of you who don't understand what I'm struggling now with is, let's say you have a price one like, I don't know, here, okay? This is your range from low to high, from high to low, okay? And you have to imagine now, this is the target, and we would be looking for a long entry opportunity here. That would be considered a premium buy because we went long above the midpoint. And as you can see, you would have got stopped out because we are high in a premium, price traded down into a discount again, took out this low, and then went to this high. This is something that happens sometimes, not all the times. It could also could have panned out, okay? But it didn't this time. But yeah, I don't know. It happens too often when you buy in a premium that you get stopped out and then price goes to your target. So this is what I'm expecting price, or what price is likely or more likely to do than going into my target. But maybe now it's the time where price wouldn't stop me out and just delivering like I would expect it to. Okay, we see. S&P is moving higher. Dow is also moving higher. So maybe we can also, okay, why don't we just inverse the value gap? Oh, 33 points. 28. Nah, bro, everything I would enter on now is just foaming or not following my model. So this would have been the trade that I outlined in the beginning. Let's see. Let's see. Price not consolidating, but accumulating within this fair value gap. Okay, let's just measure the range. Now, from low, the beginning of the session was here. We traded to the downside. Now, this is the low of the move. This would have been the best case scenario target, okay? So the implied dealing range would be this entire range. From this low to this weekly volume imbalance high. Now everything above this midpoint is premium and everything below is discount. So you could have entered on the first percent fair value gap. That would have been trade within a discount PD array. Everything above this consolidation would be a premium, which I explained a few minutes ago with this example right here, okay? So I don't like to buy in a premium. You want to buy in a discount. And this is too far in a premium for me personally, which is the reason why I didn't take this trade. What is dollar doing? Dollar is kind of moving lower. Yeah, trading within the Tuesday, November 18th, Tuesday, 2025 volume imbalance. Okay, maybe you can just go through MESZ 2025. So as you can see, ES open here, traded higher, went down again. As I told you, this is actually what I wanted to wanted Nasdaq to be doing. Okay, manipulating higher, trapping retail trader long. Now retail trader gets stopped out with this move. This is manipulation, and now the real move starts. ES is actually doing what I would expected NQ to do. Okay, and MYMZ 2025. Dow just, I don't know, just not joining the party. I don't know what Dow is doing. Okay. Dow opened here, 9:30 opening, manipulated lower, and bro, that's funny. Okay, so I outlined two possible scenarios that could pan out for NQ, and both of them, the first one panned out in ES, and the second scenario that I laid down for you guys panned out in MYM. But the least probable scenario, the third scenario that I laid down for you guys, that I actually wouldn't or that weren't wanting to see this one actually actually came to fruition, which is just a complete takeoff to the upside. No hesitation, no real retracement. Yeah, and now you can see why I didn't take this trade. Bro, I wouldn't want to be in this trade. This doesn't look bullish to me anymore. Use this Favalli gap. This would have been enough. This wick down would have been enough to then deliver higher prices. Okay, price accumulated inside of this Favalli gap, and now trading lower again. It's 10:20. We still have 40 minutes left, so we see maybe we are provided with another trade opportunity. But no, bro, I have to go to the toilet. Okay. Second retracement down into the fair value gap. Our trade, we would technically still be in that trade that I didn't take because we are too far in a premium. But let's just tape read and see what price wants to do now. If we were in a macro, I would take this order block as an entry. But it's 10, 24, 25. I would have taken only one micro long. So this would be terminus, this would be best case scenario, but you don't expect always a best case best case scenario to be delivered to. So I would probably take this high as a take profit. 1 to 1.9 and 1.8. Risk to reward. If I would have taken, if I was in this trade and I would have more than one contract long, this would be first partial opportunity. Second partial opportunity would be midpoint between these levels, weekly volume imbalance high and upper quadrant. And maybe if I have 3 or 4, then I would leave a runner on to go to this high. But as I said, too far in a premium. Oh boy, oh boy. Okay. Order block respected once, twice. Midpoint, mean threshold of this order block traded to, price closed below the low of this order block. Technically, yes, 2 up closed candles, this would be the entire order block. But as I told you in the beginning, and another example, this the highest up closed candle in a bearish order block would be the most sensitive one, and the lowest down close candle in a bullish scenario would be the most sensitive candle. Okay, as you can see, price wicked up into this order block twice, bodies closed below its low, and beautiful reaction to the downside. Again, this is why you don't want to be trading in a premium. So this is why I didn't take this trade. I would have been stopped out now. And what I outlined a few minutes ago is that since we are in a premium, we are now more likely to see a deeper retracement, which the deeper retracement could be down below this short-term low that is still inside the first percent fair value gap. So we could see a stop out, a stop hunt below below this low to rate sell stops, and then we might see a continuation further to the upside. So right prediction, perfectly analyzed. Did not take this trade, would have been stopped out. Okay, good analysis. Yeah, let's see. S&P is also moving lower. Dow is also moving lower. S&P did in fact now took out pre-market lows. NQ obviously didn't. We are still in NQ. We are trading above here, and now we're tracing lower. S&P is taking out these lows, and Dow is about to follow. Yes. Yeah. NQ pre-market lows. Yeah. Could we now see? It's 10:30, so we could see a reversal below these relatively equal lows. That might be the bias for now. I mean, we traded perfectly to the upper quadrant, didn't close below, above it, got rejected once, got rejected twice from this high probability order block, retracement lower. If that in fact would be a market maker sell model, this would be original consolidation. Remember, we still have the RTH opening range gap below, so this we could see a redelivery down into this opening range gap, which is left open. So maybe we can look for short now. Low risk buy now would be the first stage distribution. Let's keep this fair value gap. This actually would be a nice inverse fair value gap. Yeah, I think we have all salient and pertinent PD arrays outlined. Let's see. Kind of looks like a market maker sell model to me personally. Okay, yes, already filled in the upper half of the opening range gap. Market maker sell model incoming. Okay, interesting. This CB is unfilled or stay unfilled. Let's see, 5 minute. Okay, maybe I thought we maybe see a Venom model, which Venom is like, oh, this is not Venom because Venom model requires a liquidity pool to get swept. But we have a Venom, or Venom starts on a basis of a rebalanced a balanced price action. So I thought maybe we have a busy fair value gap, then some consolidation above, and then a SIBI. So we have one-sided delivery, one busy, and another SIBI at the same area. So this technically then would be balanced price range, which would be the reason why price is not retracing up into the SIBI, because this is a balanced price action. But it's not Venom model, okay? So this, I don't know if, yeah, this could nevertheless be considered a balanced price action. We have a SIBI, a BISI, and a SIBI, so I don't know. Let's see, maybe we see a retracement up into this fair value gap. I don't think so, because yeah, we have this back and forth price action right here. Price wasn't willing to trade up into this fair value gap, and we even traded and closed below. Okay, is there a volume imbalance? No, there's no volume imbalance. So we closed below this fair value gap. So consequent encroachment. I want to see this fair value gap busy to be used as an inverse fair value gap. Now, probably ICT is going short right here, stop loss above here, and targeting, I don't know, this low right here, and has risk to reward of 20 to 1. I don't know. Yeah, relatively equal lows here. Okay. I actually want to see another retracement up into this fair value gap. Bro, this SIBI's also humongous, bro. 40 handles, one candle. Bro, I don't know, man. Midpoint respected. Um. Hmm. Mm-hmm. So why price? Okay, we have this busy. Okay, this busy was efficiently delivered in the upper half. So this back and forth makes the upper half of this busy value gap efficiently delivered. So now we trade above and resume higher, reversed on the weekly upper quadrant, weekly volume imbalance upper quadrant, accumulated a low risk sell, traded down below this, and now made the lower half of this busy fair value gap efficiently delivered with this back and forth price action. So now you would want to see, okay, let me just delete this one for a moment. There is a new imbalance, yes. You would want to see the bodies stay in the lower half of this SIBI. So it's permissible that price wicks in the upper half, but price shouldn't close in the upper half if we were in fact bearish. In a bearish scenario, if this is actually a market maker sell model, then price shouldn't close above here. So there are two scenarios. We either now just stopped all the traders out that were long and had their stop losses here, stop hunt, and we maybe resume higher into the weekly volume imbalance high, or we see a market maker sell model, which now is not likely anymore, actually, because I don't know, I would have wanted this SIBI only to be traded to into the lower half, and now we used it as an inverse fair value gap. So this actually looks like we see some more buys to be taken. Let's just wait for the macro time window. It's 10:43. We are still in a huge premium, but now we took out a sell side, so we have a new range to define. From here maybe to here, that's the high. Implied dealing range would be here. An applied dealing range is a range that hasn't come to fruition yet. So this is a range that you would want to see to be delivered, okay? That's an implied dealing range. A normal dealing range would be from high to low. That's it, okay? So, Okay, so if we were bullish, I would have preferred price. If we were actually bearish, I would have preferred price to close below. This is, yeah, price close below, but this is considered a mohawk, okay? So price is allowed to color outside the lines for 1 to 2 ticks or a point, which we did, okay? That's a mohawk. So yeah, it's kind of similar to yesterday's first percent fair value gap. We had a SIBI as first percent fair value gap, and I anticipated it to price to be traded through it and to use it as an inverse fair value gap, which we did, and then price. Maybe I'll just show you what happened yesterday. So Monday here, first percent fair value gap, SIBI. I expected it to be an inverse fair value gap that we use to trade to the upside, which we did, outlined perfectly beforehand, before everything happened here. Then price also reversed, or no, not reversed, retraced lower, took out this low, stayed inside of the first percent fair value gap, and then resumed high. So it's very similar to what's happening right now, except for the fact that this is not a SIBI, it's a BISI, so it's not an inverse fair value gap, it's just a reclaimed bullish fair value gap. Priced more or less, colored a bit outside of the lines, but stayed inside of this BISI fair value gap. Stop hunt, relatively equal highs. No retracement again. Bro, what's... Come on, bro, come on, come on. Bullshit. Bull fucking shit. Am I not allowed to say these things? I don't know. I'm afraid no. YouTube. I don't know. I think they wouldn't ban me for saying bullshit or something, but I don't know. Maybe I have to reread and rewind the YouTube. I don't know, rules, not rules. How would they call it? Like YouTube guidelines? I don't know. Huh. So obvious relatively equal highs. Let's see. New York opening range, low to high in the first 30 minutes. The high is right here. Trade down into the midpoints. 10 a.m. 10 a.m. 9:31. Midpoints. Discount fair value gap. And again, no retracements into fair value gap and then higher. So this is also difficult for me. No trade entry opportunity for me here. As I told you, if this in fact would be a market maker sell model, we would want this SIBI only to be traded to the lower half. And we completely went through it. Oh, 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 oh. And therefore, we target these relatively equal highs and maybe go into discovery again to go to the weekly volume imbalance high. We see. Okay. Close above the weekly upper quadrant would indicate further strength. And would show willingness to trade higher. Maybe into the weekly volume imbalance high. Close above. That would be breaker. Low, low, high, lower, low, higher, high. That's a breaker. Huh. Okay. That's not an entry opportunity for me. You don't know if price retraces further or stays in the upper half of this first split fair value gap. Okay, no entry opportunity here. Price traded higher, was rejected off of this upper quadrant level, too far in a premium, no opportunity to go long on, as you can see. Perfectly, didn't take a trade, would have been stopped out. Perfect, okay, stop hunt. Turtle soup entry, never ever would I have taken this sell side liquidity as a turtle soup long. No way. No entry opportunity. Kind of moving sideways for a little bit, accumulating below this low smart money. It's accumulating longs below this sell side liquidity. Now we had a market structure shift again, disrespected this SIBI, but didn't retrace down into it. No opportunity for me to enter here. Also, now guess what? No trades taken so far. But yeah, technically we have a beautiful like technical day for technical analysis. That's a beautiful day. We have low resistance. PD rays are respected beautifully. Midpoint, lower halves not traded to. Fair value gap used once, twice. Order block respected. Stop hunt, accumulation. This is now a balanced price range. Yep. Okay. This is the Venom model. Now, the Venom model I tried to explain a few minutes ago. Above here, we didn't have liquidity swept, which is the reason why this wasn't Venom model. This in fact is Venom model. Why? We have sell side liquidity, we have down close candle who takes out all these sell stops, accumulation, SIBI, BISI, that's a balanced price range. That's the reason why price didn't need to come back down into it. So yeah, the only opportunity in a Venom model to enter is if you anticipated turtle soup, enter below a sell side long, or you can enter on this open of this order block when price trades through this level, that's when you can enter on. Where do you put your stop loss at? Below this below this midpoint of this balanced price range. But yeah, it's too much for me. 44 points, too big of a stop loss. So no opportunity for me to enter on. Okay, as I told you, breaker. Same with fair value gaps or no, not fair value gaps. Breakers. Breaker order blocks. In the bullish order block, the lowest down close candle is the most sensitive one. In the bullish breaker block, which is this one, or technically this 1, 2, 3, 4 up close consecutive up close candles, that's the entire breaker block. But the highest up close candle is the most sensitive one in an order block, in a breaker block. Okay, so price not even going down into the breaker right now. Respecting and being supported from this weekly volume bands upper quadrant. Beautifully, bodies respect it to the take wicks wick through. Bro, there's no entry mechanism that I can utilize to enter anywhere here. Yeah. So I would have wanted to see something like this. Stop hunt, breaker, retrace down into inverse fair value gap, or breaker. Inverse fair value gap would be even better. Create an order block here. Whoops. Create an order block here. Then trade down into the order block plus fair value gap. That would be an enter opportunity for me. Stop loss below order block, below midpoints, long, targeting these relatively equal highs, and maybe something further on the buy side. Didn't happen. Balanced price action, no retracement, price just taken off. Damn. Okay. Okay, I'm price now retracing down into breaker. Fair value gap. No, that would be enough. Volume imbalance. Come on. Okay, that's a tiny one. Tiny little whoop. Oh boy, oh boy. That's a suspension block. Right there. I see you, boy. But you don't hide from me. Yeah, 1 minute left. I don't trade after 11 a.m. So I guess that would be it for today. I think I just continue tape reading until probably this weekly volume imbalance high level is going to be traded to. Maybe we see that, maybe not. Breaker. What's S&P doing? Yeah, same as NQ. Dow is running higher. Seems like we have respect in the midpoint, which is what we want to see in the bullish scenario. Price, but is even closing above the upper quadrant, which is definitely bullish. So if we manage now to close above the quadrant again, that would be a good potential order block. If we can close above there now, but I don't know. I don't know. Okay, since we just rallied higher doing New York, okay, we had a retracement. Okay, if it would be a straight shot from opening bell to 11 a.m., we could anticipate a reversal during the lunch macro, but since we had a retracement already, did take out everybody, or not everybody, but the people who were long, who traded the stop loss below the short-term low, they got stopped out. So smart money did its job. So yeah, I thought maybe we could see a lunch macro reversal to maybe opening range gap. But yeah, since we already had this retracement, I don't know. Nothing I would be concerned with too much. Okay, there you go. There you go. Order block, close above. So now we want to see higher prices. Getting above this high. Closing above this high. Closing above this rejection block. Which price is now being rejected from. Trading down into this order block. High right there. Order block high. And now, as ICT would say, dog whistling. Obviously, I don't know. I'm not an ICT, so I think it's just the 30 years experience he has. Because I always wonder how he knows to pick, let's say, if he was taking this turtle soup, bro, he wouldn't be taking the turtle soup right when price traded down here. I bet you that bro would be taking the long right on this candle where price is reversing. That dude is never in drawdown. I don't know how he does it, bro. It's just, I don't know. It's the 30 years experience he has over us. Okay, so price being rejected from this rejection block didn't close above the rejection block nor the high. So order block most sensitive lowest down close candle. Traded to also trade down into breaker. Okay. Yeah, 11:05. So I guess, guys, that's it for today. I hope you enjoyed it, and I hope you had some fun. I guess that's it for today. I'll catch you in the next one. I don't know if I'll be streaming tomorrow. Tomorrow we have NFP. Let's see. Yeah, I'll probably be streaming tomorrow. Um, Tomorrow 8:15 NFP, 8:30 nothing, 10 a.m. high impact news. Yeah, so I think tomorrow also could be a good day to trade. Okay, price no disrespect in it. Retracing lower into balanced price range. Whatever, I don't care. It's 11:06. I don't trade after 10 a.m. 10:59. So 11 a.m. I'm gone. Guys, I catch you in the next one. Be safe.